This video is about finance and how to make your money grow. Can you really invest in crypto today without risking everything? By the end, you'll know how to invest in crypto safely. Cryptocurrencies are no longer just a trend. They are becoming part of how people store value, transfer funds, and even build wealth across the world in unexpected ways. The fear of scams and volatility often stops beginners from investing in crypto, but with the right strategies, you can protect yourself and still make powerful gains. Investing in crypto is not about gambling or jumping on hype coins. It's about understanding the system, choosing solid assets, and using tools to reduce your risks. You do not need thousands of dollars to start. Even small amounts can grow significantly over time if you stay consistent, disciplined, and make smart moves. Let's start by breaking the myth that crypto is only for tech experts. You don't need to be a programmer or a trader to understand and benefit from this space. Think of crypto like digital real estate. The earlier you get in wisely, the more potential you have to benefit from the growth and demand over time. Most people get burned in crypto because they chase hype. They buy at peaks and panic sell at drops. That is not investing. It's reacting emotionally to volatility. Successful crypto investors build a strategy before putting in a single dollar. They know their goals, risk tolerance, and which coins they truly understand. Start by choosing a reputable platform. Avoid unknown apps. Stick to exchanges that have years of history, good reviews, and full security verification processes. Enable two-factor authentication the moment you create your account. Security must be your top priority. Hacks happen when people get lazy or careless. Do not store large amounts of crypto in exchanges. Always transfer them to your own cold wallet, a physical device disconnected from the internet. If you must use a hot wallet, pick one with high user ratings and regular security updates. Keep your recovery phrases private, offline, and safe. Now let's talk coins. Bitcoin is still king. It is the most recognized, the most stable, and the first step for most serious investors getting into the space. Ethereum is the second giant. Unlike Bitcoin, it powers smart contracts and thousands of decentralized apps. That gives it a long-term use case that matters. Avoid meme coins unless you fully understand what you're doing. These are highly speculative, pump-and-dump playgrounds where most people lose money fast. Focus on utility-based cryptocurrencies. Look at what problem the coin solves, who is behind it, and what partnerships or growth plans are in place. Read white papers. They are like business plans for cryptocurrencies. If a coin has no clear purpose or team, stay far away from it. Only invest money you can afford to lose. Crypto markets are fast-moving and unpredictable. Your rent or emergency fund should never go into this market. Dollar cost averaging is one of the best techniques for beginners. You invest the same amount every week or month, regardless of price, reducing emotional decisions. When prices dip, view them as opportunities. If you've done your homework, a crash is not the end. It's a chance to buy quality assets at a discount. Never buy because of FOMO. Fear of missing out is one of the most dangerous emotions in investing. Stick to your plan, not someone else's excitement. Don't rely on influencers. Many promote tokens they're paid to mention. Just because someone has a big following doesn't mean they understand finance. Stay updated on regulation. Different countries treat crypto differently. Knowing your local laws can protect you from tax issues and legal problems. Keep your portfolio simple at first. 1 to 3 solid coins is better than holding 10 tokens you don't understand or can't track. Use limit orders when buying. These allow you to set a price you're willing to pay and prevent you from panic buying at high prices. Set goals. Are you investing to hold for 5 years? To grow capital over a year? To diversify income? Know your why before you start throwing money in. Be patient. Crypto is fast-paced, but real gains take time. Don't expect to double your money overnight. Think long-term and let your investments breathe. Use stop losses if trading. They help minimize losses when a coin drops sharply. But if you're holding long-term, don't obsess over short-term price drops. Keep emotions in check. Investing requires a cool head. Stick to your research, your rules, and your roadmap, even when the market gets wild. Don't check your portfolio every hour. Watching price changes constantly can cause stress and impulsive decisions. Let your investments work in peace. Join crypto communities carefully. Forums and groups can help you learn, but they can also be filled with hype and misinformation. Always verify what you hear. Every investor makes mistakes. What separates winners is how they learn from losses, adjust their strategy, and come back smarter and stronger. Use a spreadsheet or app to track your portfolio. Knowing how much you invested, when, and where keeps you informed and in control at all times. Diversify, but not too much. A few good coins are better than a dozen random ones. Know why you hold each asset and what role it plays in your strategy. Research before every buy. Never invest because a coin is trending. Study its history, roadmap, team, use case, and long-term potential. If a coin promises guaranteed profits, it's probably a scam. Real investing comes with risk. Anyone who says otherwise is trying to fool you. Avoid giving your private keys or wallet info to anyone. Not your friends, not a support agent, not a random person online. No one, ever. Never invest based on price alone. A coin can be cheap for a reason. Focus on value, not price. A low price does not mean a good deal. Beware of pump and dump schemes. If a coin suddenly skyrockets without news or development updates, it may crash just as quickly. Stay cautious. Time in the market beats timing the market. You're better off investing steadily over time than trying to guess the perfect entry and exit points. Crypto taxes exist. Learn how to report your gains and losses correctly. Ignoring tax rules can lead to big problems down the road. Don't borrow money to invest in crypto. Using credit cards, loans, or margin is dangerous. The risk of loss multiplies when you use borrowed funds. Trust your own research more than hype. Learn to read charts, white papers, and market trends. The more you learn, the better your decisions become. Crypto is about decentralization. Understand what that means. You have more control, but also more responsibility over your funds and decisions. Avoid short-term thinking. It's tempting to flip coins for quick profits, but true wealth comes from discipline, vision, and patience. Use secure passwords for all your crypto accounts. Avoid easy-to-guess phrases or repeating passwords. Cybersecurity is your personal vault. Stay alert to phishing scams. Fake websites, fake emails, and fake wallets can trick you into giving up access. Always triple-check before clicking. If something feels off, trust your gut. Scams often have a strange pressure to act fast. If you feel rushed, pause and investigate before doing anything. Track your emotional patterns. Are you buying when excited? Selling when scared? Emotional investing leads to poor decisions. Learn your patterns. Balance your crypto with other financial tools. Don't put everything into digital assets. Keep savings, cash, and traditional investments too. As you grow, rebalance your portfolio. What worked with $100 may not be ideal when you have $5,000. Adapt your allocations. Set automatic transfers for your crypto investment plan. This keeps you consistent, disciplined, and removes the stress of remembering every month. Celebrate small wins. Reaching your first 100 or 1,000 means you're building momentum. Recognize progress to stay motivated for the long run. Talk about your journey. Sharing what you've learned can help others, and help you reflect on your own progress. Just don't give financial advice. Protect your mindset. Crypto investing requires clarity, calm, and confidence. Avoid letting noise, fear, or greed take the wheel. The market will test you. Big drops will happen. The key is not to panic. Focus on your plan, your research, and the bigger picture beyond today. Do not chase every new coin or trend. Stick to your strategy. The market always has a new shiny object, but not all that glitters is gold. Think in percentages, not just profits. A 5% gain on a consistent basis can outperform a one-time jackpot with massive risk attached. Don't compare your results to others. Everyone has a different risk tolerance, timeline, and journey. Focus on your own goals and progress. Learn the difference between speculation and investing. One is driven by emotion, the other by logic, research, and patience over time. Be prepared for corrections. Markets do not go up forever. A correction does not mean failure, it's a natural part of healthy market behavior. Avoid revenge investing. Losing money can hurt, but chasing losses only multiplies your mistakes. Pause, reflect, then act with clarity. If a token has no roadmap, no team, no use case, walk away. Every solid investment starts with a purpose and a plan, not promises and hype. Crypto can be empowering if approached with wisdom. The same tool that drains wallets through greed can build freedom through discipline. Read news from multiple sources. Don't rely on one outlet or influencer. A wide perspective protects you from falling into echo chambers. Stay humble. Even experts can be wrong. The moment you think you know everything, the market will humble you. Stay curious and cautious. Investing is not only about money, it's about who you become in the process. A wiser, more patient, more informed version of yourself. Don't fall for the myth of instant wealth. Most people you see, winning, spent years learning, failing, adjusting, and trying again. Track how much you're investing monthly. This helps you stay on budget and ensures you're not overexposed without realizing it. Ask yourself before every investment, would I be okay holding this for 5 years? If the answer is no, rethink your decision. Always plan your exits. Know when and why you'd sell before you buy. This helps you make smart decisions under pressure or excitement. Use visualizations. Picture your future self with financial freedom. Connect your daily investing habits with that long-term vision. Avoid toxic spaces online. Some communities feed anxiety and greed. Surround yourself with calm, growth-focused investors and educators. If you're overwhelmed, start small. A little is better than nothing. One step in the right direction beats paralysis from overthinking. Revisit your plan every few months. Markets change. Your income changes. Life changes. Update your goals and methods to stay aligned. Don't brag about gains. Quiet success builds lasting confidence. Loud wins attract unnecessary pressure and comparison. Stay focused. Crypto investing rewards the patient, not the loud. You don't need to show off. Just grow your account steadily, securely, and wisely. Keep learning. Crypto is evolving every day. From NFTs to Web3, staying informed gives you an edge and protects you from falling behind. Use books and courses to deepen your understanding. Free videos can help, but structured learning gives you long-term clarity and depth. Be honest with yourself. If you're investing out of desperation, pause. Desperation leads to poor choices. Focus on rebuilding your foundation first. Don't treat crypto like a lottery ticket. It's not luck, it's strategy, discipline, research, and emotional maturity that lead to lasting gains. Take breaks when needed. It's okay to step back, reflect, or pause your investing. Mental clarity is part of long-term wealth building. Document your journey. Keep a journal or digital notes. Tracking your thoughts and decisions helps you avoid repeating past mistakes. Imagine your future self thanking you for starting now. That vision alone can help you stay disciplined through the ups and downs ahead. Make learning about crypto a habit. 10 minutes a day adds up fast. Over months, you'll go from confused to confident without feeling overwhelmed. If your friends or family doubt your path, stay respectful. Let results speak for themselves. Not everyone will see your vision, and that's okay. Be the kind of investor who inspires others. Not with flashy numbers, but with consistency, clarity, and integrity in your decisions. Remember that wealth is not just about money. It's about freedom, peace, options, and the ability to live life on your own terms. Track your emotional triggers. Are certain market moves making you anxious? Journaling these patterns can help you create better habits. Do not confuse price drops with failure. A strong coin dipping in value is not broken. Price is temporary. Value is long-term. The best time to prepare is before chaos hits. Build your plan in calm seasons so you can act with clarity when the storm comes. Avoid relying on luck. Treat your crypto plan like a business, structured, intentional, and with clear metrics for success and risk. If something seems too good to be true, it probably is. Always ask yourself, who benefits from this? What do they gain from my attention? Risk what you can lose, not what you love. Never gamble with savings, rent, or money you need soon. Crypto should never create fear. Balance optimism with realism. Believe in the potential of crypto, but prepare for volatility. Hope with a helmet on. Read before you react. Before panic selling, review your notes, white papers, and goals. Reacting blindly can cost you long-term gains. Take wins off the table. If a coin rises fast, consider withdrawing a portion. Lock in gains. Let the rest ride only if it aligns with your plan. Use mistakes as tuition. Every bad trade teaches a lesson. Every lesson improves your future strategy. Fail forward. Don't get addicted to charts. Staring at red and green bars all day doesn't build wealth. Strategic decisions do. Build habits around your financial goals. If you automate saving and investing, you remove emotion from the equation and gain consistency. Remember, you are your greatest asset. The more you grow in discipline and knowledge, the more powerful every dollar becomes in your hands. There is no perfect time to buy. Waiting forever for the bottom often means missing the train. If it's a solid project, start with what you can. The world is changing fast. Crypto is part of a massive shift in finance. Being early matters, but being prepared matters more. You don't need a financial degree to succeed. What you need is curiosity, patience, and the will to learn and apply consistently. Build your wealth slowly and sustainably. Fast money often leads to fast regret. Long-term gains are more stable and fulfilling. Stay grounded. A big win can boost your ego. A big loss can crush it. But neither defines you. Your habits, focus, and growth do. Crypto will not fix your life. It is a tool. You are the one who must build the structure, the system, and the foundation that wealth stands on. Use simulations if you're nervous. Paper trading or demo investing lets you practice before risking real money. Build your confidence first. When others panic, look for opportunity. The best prices often appear during fear. That's when calm investors make their biggest moves. Avoid debt traps. Some apps let you borrow against your crypto. Be cautious. Liquidations can happen fast if prices fall quickly. Financial freedom is not built in a day. But every smart decision adds a brick. And every day you stay consistent, your wall grows taller. Don't obsess over the news. Markets are influenced by headlines, but your decisions should be guided by research, not emotional reporting. Your greatest advantage is time. Most people give up too soon. If you stay in the game, learning and adjusting, you gain an edge automatically. When others give up, you grow. When the market goes quiet, that's your chance to learn, plan, and position yourself for the next wave. Reward yourself for discipline, not luck. Congratulate yourself when you stick to your plan, not just when you make money on a trade. Make your portfolio boring. Yes, boring. Predictable, solid, sustainable portfolios beat exciting, risky ones over time. Do not follow the crowd. When everyone is buying, ask why. When everyone is silent, listen closer. Noise often hides the real opportunities. Be willing to start over. If you lose money, learn. Regroup. Rebuild. Quitting guarantees failure. Starting again opens the door to growth. Remove ego from investing. The market does not care how smart you are. It rewards discipline, not pride. Humility wins in the long run. Don't trade just to feel productive. Every move should serve a purpose. Doing nothing is sometimes the best decision you can make. Avoid over-optimizing. Too many changes too fast can backfire. Let your strategy play out. Give it time to work before you pivot. Talk to people you trust. Sometimes, a simple conversation helps you clarify your thoughts and avoid emotional decisions. Audit your strategy quarterly. What's working? What's not? Where can you improve? Use data, not drama, to guide your updates. The market is not your enemy. It's a mirror. It reflects your beliefs, emotions, and decisions. Learn from it, not fight against it. Avoid analysis paralysis. Too much research can lead to inaction. Pick a date. Start small. Let learning come through experience. Choose quality over quantity. One good coin you understand deeply is worth more than 5 coins you don't know anything about. Master your reaction, not the market. You can't control the price, but you can always control your mindset and your next move. Measure success in knowledge, not just profit. If you learn something from every trade, you are growing, even if the numbers don't show it yet. Stay out of hype cycles unless you understand the risks. Hype is a wave. You can surf it or drown in it. The difference is preparation. Track your reasons for buying. Write down your logic before entering a trade. When doubt comes later, read it. Trust your original clarity. Crypto investing builds more than wealth, it builds character. You learn patience, focus, and resilience under pressure. Avoid panic buying after big green candles. Just because something went up does not mean it will keep going up. Be logical, not emotional. Keep backups of everything. Seed phrases, account info, passwords, stored offline, securely. Losing access means losing everything. Your safety is more important than any potential profit. If a platform feels unsafe or shady, walk away immediately. Practice gratitude. Remind yourself that being able to invest is already a privilege. Millions wish they had the same opportunity you do. Set boundaries. Don't let investing take over your mental peace or relationships. Balance your financial goals with your well-being. Compare your progress to last year, not last week. Long-term trends reveal growth. Short-term dips are just noise in the bigger picture. Look at crypto as a long game. The next year matters, but the next 5 or 10 years? That's where the real transformation lives. Create a checklist for every trade or investment. This avoids emotional decisions and ensures every action follows a clear process. Avoid lifestyle creep. Just because your portfolio grew does not mean you should spend more. Let your wealth grow before your expenses do. Choose clarity over speed. Rushing into investments without full understanding often leads to regret. Take your time, then move with purpose. Build conviction through education. The more you understand a project, the less market noise can shake your belief in it. Set milestones. For example, when my portfolio hits $500, I will research staking. Milestones create focus and momentum. Make reinvesting a habit. Compound your wins by putting profits back to work. This is how wealth accelerates quietly over time. Do not ignore small fees. Over time, they add up. Whether it's trading, withdrawal, or network costs, track them and minimize where possible. Understand staking and yield options before using them. Higher returns usually come with higher risks. Read all the details first. Avoid emotional highs and lows. Stay even-tempered. Highs can lead to arrogance. Lows can trigger doubt. Keep your balance always. Remember that wealth is the result of boring, repeated actions. It is built through time, not luck, not timing, not shortcuts. Listen more than you speak. The smartest investors often say less and learn more by observing quietly before they move. Don't let others manage your money without full transparency. If you do not understand what they're doing, you are handing away control. Use mobile apps for daily check-ins, but turn off alerts. Too many notifications create stress and distraction. Simplicity brings peace. Always look for patterns in your wins and losses. What decisions led to success? Which emotions led to mistakes? Let patterns guide improvement. When in doubt, do nothing. Waiting is a strategy. If the market feels uncertain and your plan is unclear, pause and protect your capital. Journal everything. Each buy, each sell, each emotion. Over time, this becomes a guidebook built from your own experiences and lessons. Never let a win make you careless. The next trade does not owe you anything. Stay sharp and grounded after every gain. If a coin has no clear function, ask why it exists. Hype fades, but utility creates long-term value and staying power in the market. Avoid relying on hope. Hope is not a strategy. Replace it with plans, checklists, and clear risk management before investing. Reward yourself for learning, not just earning. Completing a course or finishing a white paper deserves celebration too. If someone is pressuring you to invest fast, walk away. Urgency is a red flag in the world of investing. Take your time to think. Keep long-term targets visible. Write them down. Look at them weekly. Let them drive your decisions when temptation or panic shows up. Your future wealth is built on your current habits. What you do daily, read, invest, reflect, creates your outcomes one step at a time. Some months, your portfolio may go down. That does not mean you are doing it wrong. Volatility is normal. The key is to stay committed. Learn to speak the language of crypto. Understand terms like blockchain, staking, liquidity, and smart contracts. Knowledge is confidence. Crypto is not a shortcut to riches. It's a tool that, when used wisely, can build freedom. But it requires work, study, and emotional control. Track your biggest lessons monthly. Ask yourself, what worked? What failed? What will I do better next time? Improvement compounds. Next and final part. Paragraphs 181 to 210, ending with the required phrase. Here is the final section. Paragraphs 181 to 210, completing the full script. Don't confuse confidence with recklessness. Believe in your strategy, but always leave space for doubt, revision, and learning as markets evolve. Teach what you learn. Explaining concepts to others deepens your understanding. You become a better investor by becoming a better teacher. Make sure your financial house is in order. Before risking anything, have an emergency fund, stable income, and clear budgeting in place. Learn to detach from price charts. Let your strategy dictate your actions, not your screen. Obsession over candles leads to emotional moves. Your goal is not to beat others, it's to beat your past self. If you are wiser, calmer, and more prepared than before, you are already winning. Think in decades. Ask yourself, how will this investment look 10 years from now? That shift in time horizon can prevent 100 bad decisions. The most powerful trait in investing is patience. Anyone can start, very few stay. Those who do, they are the ones who see the real rewards. Avoid extremes. You don't have to go all in or all out. Balanced, moderate investing protects your capital and preserves your peace of mind. You don't need to be perfect. You just need to be consistent. Small wins, small steps, small efforts repeated over time lead to big outcomes. Track your wins and reflect on them. Celebrate discipline, courage, and clarity. These traits matter more than short-term profit or loss. Always know why you're in the market. Are you building freedom, security, options? Knowing your why turns confusion into focus. When others chase hype, stay grounded. Remember your rules. The crowd often moves blindly. Clarity sets you apart from noise. Crypto is not just about charts and coins. It's about reclaiming control over your financial future. That is the true power of decentralization. Your environment matters. Who you follow, what you read, and where you spend time impacts how you think, act, and grow as an investor. Don't copy, customize. Learn from others, but tailor every strategy to your goals, your risk tolerance, and your timeline. Avoid flipping strategies too often. Give each method enough time to prove itself before deciding to pivot or tweak your approach. Don't trust anything that promises zero risk. All investments carry some risk. What matters is how well you understand and manage that risk. Be patient during bear markets. That's where real investors are built. Bear cycles test your mindset, sharpen your discipline, and refine your strategy. Let your portfolio reflect your values. If a project doesn't align with your beliefs or goals, you don't have to support it. Your money is your voice. Stay curious. New technologies, tools, and innovations are emerging daily. Lifelong learners thrive in the fast-moving world of crypto. Protect your wealth by protecting your mind. Anxiety, fear, and greed are more dangerous than any price chart. Calmness is a superpower. If you made it this far, you already have what it takes. You're willing to learn, adapt, and grow. That puts you ahead of most people. Crypto investing is a journey. There will be ups and downs. But with the right habits, mindset, and strategy, you can make that journey a path to freedom. Subscribe so you can learn how to change your mindset and your money to build wealth.